Good afternoon. Welcome to London Academy of Trading's weekly market insight. Let's start with the absolute circus that is the US presidential election. Voting is now closed, leaving only the counting process left. One would assume that was the most simplest part, but it seems to have caused quite a stir. Currently, Democratic candidate Joe Biden is in the lead with a high likelihood of winning. That being said, the swing state of Pennsylvania is yet to be claimed, with the possibility of a recount in Georgia, given how close Biden won it by. In light of this, US President Donald Trump has already set the wheels in motion to sue over potential tampering of the voting system. Looking to take this matter to the Supreme Court, which should in turn delay the official result and what many see as an inevitable end of his tenure. The dollar has taken a huge hit of late, whilst the equity market rally seems to have stalled. Here we see dollar yen breaking support, possibly down to March COVID lows of 101.20. A level that was also tested back in November 2016, here, when President Trump was announced as the new president of the United States. Yes, the irony is not lost. We also see the S&P index bounce here, bounce off this 32-33 support level and now store the technical trend line. A breakthrough could allow the all-time highs at 35.90 to be tested, broken, and surpassed by some way. In line with that technical possibility, the general investor sentiment is somewhat positive. If the likely outcome should transpire, this is a Biden win. This would allow him to push through his huge COVID relief package, but also a split Congress would limit the Democrats' ability to negatively impact the corporate world through their proposed regulations and tax tariffs. In addition to this, we do have US employment data at 1:30 p.m. today. Usually increased volatility expected, but do not be surprised if markets remain calm due to the election in anticipation of the US Open an hour or so later. In the UK, the nationwide Tier 3 lockdown is underway, seeing many hospitality outlets send their staff home and close their doors this week. In response to this, UK Chancellor Rishi Sunak did announce that the government-backed work furlough scheme will be extended to the end of March 2021. Brexit negotiations are still ongoing, as we see Euro Sterling approach this counter trend line after bouncing off this multi-month bull trend line. Keep an eye out next week for further developments, of course. Do remember US data at 1:30 today, and next week will be rather light data-wise, with the main focus being on the aftermath of the US elections and, if at all, any progression a UK deal with the EU. Do stay safe and have a lovely weekend.